Welcome to TradeTheNBI.com. This is John. This reports for the 3rd of February, and we are going to start off with the coronavirus, the outbreak, and really what everyone who is paying attention is looking at the R-naught factor and how quickly this is spreading, and it's exponential compared to most other flu outbreaks and that. So with that said, the panic as worldwide cases appear, the question will be in this coming week, do we see exponential growth in places where we can rely on the information, meaning outside of China, because the details we're getting from in there, nobody knows if they're accurate from what happened after the SARS and the MERS outbreak. So now that we know that we have cases around the world, if we start seeing those go from 4 to 16 to 30 whatever, then you have a serious thing where the market will actually be very concerned. If that doesn't take place, then I think we'll see a potential bounce back in this. We're literally, once we broke down from, well, we saw this happening at the beginning because we had the steel cross below. We were already within a sell signal. We didn't get the step down of the orange to let us know that things were going to, turn around or be okay. We knew that there was going to be an attempt to try and come back to the 100%, but it's been tepid and weak at best. But if there's a bounce back rally, it'll come off of not seeing exponential cases. It doesn't mean that we still weren't due for this pullback, and we were long overdue. I mean, we'd filled most of these positive extremes when we had that dip back over here. So a lot of that's been taken care of, except for going all the way back to right here, and that's going to bring you down to the 3140. So that's still another 80 plus points below where we are, just to be within normal ranges. And you can see also the dip below the red line back here where the dots, now it's obviously lost a lot of its effectiveness, because once those stop printing, then you know that you've reached a point where it doesn't mean they're not going to come back to it. It just means that it's lost its immediacy as far as effective. But we never even had close to a signal. We've had cyan under red for the majority of this. It peaked up right over here, but we were still within a full reset. It wasn't until we came back up and over on this one where we got interested, because we were making a lower shakeout, and you had the clear move of steel coming above and then back below, and that's when we had all the crosses at relatively the same time, within a day or so of each other, and that was the trigger point, and sure enough, it worked out beautifully. So all that being said, we had good action in between all of it. No complaints about any of that. It was fun to and these are the things, when you get this kind of volatility increase, it's just an opportunity to really make outside gains at the start of the year. A lot of people get scared and pull out, and it's like, no, this is the time. I was saying the same thing back in 2008 and 2009 when there was a lot of volatility in ranges. It was like, this is the time to be, part of it. The bird exit took place, and guess what? The EU is still there, and so Europe rallied off of the fact that the world didn't end because Britain left the EU. Yeah, what a shock. And oil continues its slide. We didn't see any potential recovery from this at all, and we can tell why. I mean, you've now closed off at least 50 to 60 million Chinese, and then the fear factor of other people. This is going to impact travel. It's going to impact business. So oil obviously is that early bird warning saying, hey, demand is going to fall off of a cliff, relatively speaking. U.S. is still doing okay. We'll see in the coming weeks if there's an expansion. We had a case in New York, Massachusetts, so we'll be following that. And then the fear factor, gold continuing its up move, breaking, and it's still strong. Look at that with the reset of the steel and cyan underneath. Yeah, that's healthy looking. So intraday, well, we had that big run up, positive extreme. So we had all those markers that they needed to be filled, and sure enough, boom, early on it hit that. We had a couple of little decent potential buys, but then it turned around, faded pretty darn fast. And you can see how truncated my chart is here, because there was so much action volume-wise that it takes up a lot. We still have a long way to go on the day. But then we had to sell, and there just wasn't anything. Look at that, the steel. That's Wasn't until here that it reset, so there was the potential that this one had a little bit more legs, but immediately DOC spread right at the red DOC 0 level. Again, nice, I like that. Sometimes it can take a few bars, we know that. But all it did was come back down. You had positive extremes that were coming through there, it filled those, and then the signal was still short, so hey. Piece of cake. Even these little buy setups that came without any move above the plus 13.5. You did have the cross. That was enough to generate the orange, but we could tell that this was going to not have anything of strength, and sure enough, retreated really quickly. Same situation happened over here. It was a little bit closer to creating a decent signal for a buy, but not enough, and the rejection, boom, all the way back down to lows. And then as we proceeded to cross, we ended up with a fairly decent one. We can enlarge it just a fraction here. There we go. One more size. And one more time. There we are. So, and this is what I was talking about, like when you see that reset, we already had cyan underneath, so that created a little bit of the pop coming back up. So when this DOC spread took place, you're coming off of a reset, so okay, you know that it may not, but what happened was, is as we came across from the BK signals that were right there saying, hey, this is going to happen, we had a couple of little up bars where the steel was trying to make its move, came above and then rejected, and literally on that rejection, you can attack that baby strong, and this is why. I mean, you just look at that, it broke down new lows, everything, so. But it bounced back pretty hard with a boat, see, spike above 13.5, orange clearly below, breaking into a new zone. Actually, it was the bar earlier, so you put on the open here. That produced the green crossover, which was your little orange bar right there with the stop. And that's what ran through the end of the day, hit that resistance, 32.27 right there. It blocked it, so we're going to have the open from Hong Kong shortly, and depending on the fear factor and whether or not people feel like things are out of control or at least somewhat in containment, we'll see how it goes. I would expect that we're probably going to see some more selling, but it's possible that we could just keep moving on towards filling back some of that major move lower. People may see the benefit of it if they think that things are under control. So always when you get these. Plus we got Iowa caucuses starting, so that's the beginning of the political season. Oh, it's going to be fun. It's going to be fun. So let's get ready for it. As always, though, I will put up charts as we move along, anything interesting, and I will certainly update you on some of the changes that took place inside the indicators. There was a couple of additions that I'm still working on profit factors for on the MBI Opus trades as well as the Power Mode 2. So if I finalize those with all of the proofs, then I can send up the update. As always, though, trade well. We'll talk again later.